All right, folks, this is Patrick Zielbauer again from Infinity Futures. Thanks for joining us. We got about 14 minutes before the presentation comes up. Thanks for those of you who are joining us a bit early. Rob will be with us in about 13 minutes at 9 a.m. Central. So we're going to go through a complete discussion of risk and an objective discussion of risk at 9 once we get started. I wanted to take a couple of minutes for some of the questions that are coming through already about what's on the screen, just show you a little bit about the trading platform and the charting. This is what Rob has been using with us for a long time. This is a practice environment. So the trading that I'm going to be doing is simulated, but if Rob sees an opportunity, he's going to be going in on his live account. Okay. I'm going to show you a couple things here. Hang tight with me just one moment. Okay. Again, yes, thanks for coming in early. I got to hide the questions just for a minute so I can see the majority of the screen here. So I'll address some of the questions in a moment. But basically what you're seeing here is our trading platform. And one of the common questions that has already come up a few times is, what does it take to get an account going here? How do you get into futures? And we'll talk, more about that, and I'll answer more of those, general questions. But the minimum to open an account with Infinity is $3,000. So that's the minimum to start an account up with us. Basically, if you open an account, you fill out the application on the website, we give you an approval, send some money into the account, and then we can get you up to speed very quickly. But if you want to just test things out, we do have a trial version of this software with live data on a number of different products that's good for a 30-day period. So there's no risk. You don't have to open the account first or send any money or give any serious personal information out in order to do that. That's something you can do right on InfinityFutures.com, and I'll post a link here directly to the practice account request page as well. So if you do want to give it a whirl, just to test things and play around, even to follow along with Rob, you're welcome to do that. What you see basically is on the left-hand side is a charting program. This is something called Sierra Charts. It's offered with an Infinity account. It's free with 10 round turns every 30 days. So a round turn is like one buy and one sell. So that's one round turn. We're looking for 10 of those on a 30-day cycle in order to waive the fee that we would otherwise charge for this charting program, which is only $20 anyway. So it's a very inexpensive charting program to have access to. And it's basically free if you're doing even a little bit of trading. And for a day trader, 10 round turns in 30 days is not an obscene volume threshold. Most people can reach it really quickly. You see on the left-hand side this quote board. And then over here, we've got some charts. Now, this is just an example I've made, but we've got a daily chart with some volume here. We've got a 60-minute chart with a moving average. We've got a 5-minute chart with a trading interface on it because you can trade right off the charts. You've got MACD here at the bottom. So this is just an example. But the idea here is, like, let's say I want to switch over to the Dow. I could just click on YMU7 here, which is the symbol for the Dow, and the charts flip over to the Dow. If I want to go down and look at, say, crude oil, I could go right here, CLU7, and they flip over to crude. If I want to go to gold right here, I can left click here and just everything flips right over to gold. So it's a very lightweight program. You can see how quickly things are, flipping from one to the other. It really doesn't put any pressure on the machine. Most of you guys probably have computers that are, 100 times what's necessary to run an application like this. It's a very, very light application. All right, on the right-hand side, you see the InfinityAT Dome, which is really the core of our business. Before we ever really got into the charting world, our clients really just used us for order execution. That is our focus. So what I have up here is the E-mini Nasdaq. Let me flip the charts back to the Nasdaq. And I took a couple of practice trades earlier today. That's 140 SIM dollars there, okay? But just to show you a little bit about, how to get the orders in and cancellation and modification and some of the stuff you can do, it's really, really easy. So let's say I just want to buy one contract. So the market's breaking here. Let's say that I think it was going to hold this area, this trend area. I could just hit buy market. Okay, and we get filled and we're long one contract right away. So this yellow price means that we got filled at 59.01 and a quarter. This is a live market, okay? So this could go up or down. We don't know what's going to happen. You can see the position I have showing on the charts here on the left-hand side, so it tells us how we're doing. And there are some really cool things you can do with the program. Like you could say, all right, well, I want to go ahead and issue, a bracket around my position. So now I have a stop loss down here. I have a target up here. I can modify these orders basically with one click and then another click to drop the order. So it's a very nimble program. It really allows you to maneuver in a fast market type situation. And you can have as many of these depth of market programs windows as you want. So if I wanted to have, let's say on another screen or something, I wanted crude oil, I could put crude right here. And we could do something fun with crude. Like we could do what's called a simple bracket style trade where we put a stop and a target in automatically once we get filled. So let's say we want to go long crude. I would just check this auto box. I have my profit and stop loss in here and just buy one contract at the market. We get filled right away. We're long from 46.82, stop down here, target up here. Meanwhile, the Nasdaq trade's still going. So this is a kind of a cool feature because you can monitor a lot of different things, and really you just have to worry about the entry. You can let the platform, handle the exit strategy. So if you want to engage in this sort of automation, which I would consider sort of semi-automated trading, the platform allows you to do this kind of stuff without being a programmer. You don't have to develop any of this. It's just sort of fill in the blanks. So crude, is kind of flat here at 82. The Nasdaq moved a couple ticks in our favor. If I really wanted to play it tight, I could take our stop loss and I could move it up a little bit to tighten things up. So let's say I feel like, we got that initial push, but we didn't get where we wanted to be. So I want to control the risk a little bit more. I just tightened the stop up. We just got stopped out, took a few tick loss. No big deal. So it's a very easy program to maneuver. A lot of our clients who come from other companies where, it's a very heavy application. There's all kinds of drop-down menus, and you don't know how long it's going to take you to get the order in. It doesn't give people the confidence to participate or take the trades that they want to be able to take to realize their objectives. So this platform, the goal of this platform is to give you something that is light, quick, has just enough functionality to get you where you need to go, but not one that is loaded with useless gadgetry that will just weigh down the system, confuse you, and stuff you'll probably never use. All right, so that's kind of our mantra, but this is an FCM owned and operated program. That means that the company holding the funds owns its own technology, its own order route and data. That's very unique in our business. It allows us to do very good support, and it's one of the reasons why so much of our business comes through referrals from other traders. So that's something we seek to perpetuate. All right, there were some questions that came through while we were doing this, so let me just answer a couple of them. Bill, I think I answered your question inadvertently. You can trade off the chart or the dome. We do plan to record the event, barring any issue with GoToWebinar, correct? Kent, in terms of the data cost, the CME charges a monthly data fee. The data fee for a typical customer here will fall between $6 and $18 a month. So very reasonable, and you actually will have a lot of control over that. So if you only want a market or two, you might only might be $6. If you start looking at lots of different products, like all the ones you see in the left-hand margin here on that quote board, these are all CME markets. This total thing would only be 18 bucks. It could be as low as 6 or 12 if you only needed 1 or 2 markets. All right? Okay, yep, a couple questions coming through. Hang tight, let me just catch up a little bit. Carlo, there's really no difference between one market or the other. I'm just running, this is a really average machine, and GoToWebinar, as you may know, is a really heavy application, so it does affect the performance a little bit. Not really enough for me to comment on it, but there's really no difference in terms of the speed of the data loading between one market or the other. What matters more is how much data you're trying to load. Marilyn, you can add the bracket after the fill using this send bracket order button right here. All right, for those of you just joining us, Rob's going to be with us in 4 minutes. My name's Patrick. I'm just doing a little demonstration of the program. A lot of questions come through, lots of folks who are less familiar with us. We do have a 24-hour desk, Jim. Yep, that is correct. So if you need to place an order after hours or really early in the morning, you can call it in. We don't charge a separate fee for that. Al, we don't really do FX, but we do a lot of currency futures. So currency futures are a large part of our business. The euro, the British pound, the Canadian, the Swiss franc, the yen, and so on. A lot of people who are migrated over from the FX side due to all the regulatory craziness that's going on in the FX world are starting to get into the currency futures. So we're seeing a lot more of that. Carlo, take that up with your rep directly. As far as the loading, it's just I don't think it's an appropriate forum for me to do that kind of tech support in this environment, but that's definitely something we can look into. All right. If anybody's curious about cost structure, things like that, margins, I'll give you kind of a quick summary. But basically, we go as low as about $500 a contract on the indexes. That is very aggressive. Usually as low as about 1,000 on things like gold and crude. So for those of you coming over from, say, TD Ameritrade, Thinkorswim, TradeStation, and so on, you're going to find that the day trade margins here are a lot more flexible and a lot lower. We also don't have a history of raising the margin every single time we see a little spike in volatility. That's just not part of our MO. So the likelihood of you waking up one day and your margins are twice what they were yesterday, that would require an extraordinary circumstance. It's not something I've seen in at least 10 years. That being said, day trade margin implies the greater use of risk. So if you're going to be trading very aggressively or you're going to be using day trade margin, just be advised that that's going to amplify your gains and losses. It's a double-edged sword, leverages. Yes, Bob, that's correct. The day margin on crude and gold is 1,000. Chris, the round turn is 1 buy, 1 sell. That's 1 round turn. If you did a 5 lot, like five buys and 5 sells, that's 5 round turns, even though really it was 1 in and out trade. So we're looking at the total number of contracts traded, not the amount of buys and sells that you do. The Russell, we think, everyone's got their own theory on this. I think it's going to pick up a lot in this fall over at CME, probably after the rollover occurs. We'll see, but we're very excited about it. I'm really, really excited about it. We've added it to a ton of people's accounts. Everyone's watching it. It's picking up a little bit more every day. It's very exciting. And yeah, that's correct. You don't have to pay the $111 data fee to ICE. Huge, huge difference. We go as low as $500 on the indexes, Bob. And as far as round turn costs, typically on the indexes, we start off around $1.29 a side plus exchange fees. We have a little flexibility for based on volume and other circumstances, but you can discuss it specifically with your rep. We are a discount firm. There's no doubt about that. Okay, cool. Lots of questions. I know I can't get to everything here. We're going to start in basically right now. So I'll be kind of hanging out in the background. So if you have questions that are more brokerage related or specifics, please feel free to to ask throughout the presentation. But we'll go ahead and get started. Okay, I'll address as many of the questions as I can as we forge ahead here. All right, folks, this is Patrick Zielbauer from Infinity Futures. Let me put this registration page up here really quickly. This presentation features Rob Hoffman from Become a Better Trader. It is 9 a.m. Wednesday, July 19th. Thank you, everybody, for attending during what is obviously a busy time in the market. My name is Patrick Zielbauer. I'm an AP or associated person of Infinity Futures, have been for about 13 years. I've been a main point of contact for Rob Hoffman and his team for a long time as well. And we are thrilled to have Rob here doing this event with us today. It's a live trading event, so depending on how the markets are moving, win, lose, or draw, Rob's going to be trading a live account. I'm going to touch on that in just a minute. But first, I'm going to run through some risk stuff real quick, and I'd ask anybody who has a risk-related question to please don't be afraid to ask if you need clarification. And we can also help you on a more one-on-one basis as well. Trading futures, options on futures and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, just be very careful. Only fund a futures account with risk capital. Risk capital, by our definition, is money that you can afford to lose without lengthening your retirement horizon or affecting your ability to maintain your lifestyle. So just be very conscious of that. If you're not sure where you fall on this, risk capital curve, so to speak, or whether or not this type of trading is appropriate for you, please feel free to have a discussion with our rep, your rep rather, in our office. Everybody here has one, whether you're a customer or not. All you have to do to find out who it is either look in your email and see where your emails are addressed from Infinity, or just send an email to trade@infinityfutures.com, and one of our management will tell you where to go and who you should be communicating with. Also, as I mentioned earlier, be very conscious with the use of day trade margin. Even if you use one contract per the exchange minimum, or otherwise known as overnight margin, when you're trading, you're still using leverage. So when you use day trade margin, which is lower than that, you're really amplifying the leverage. So be very conscious of that. And again, if you have a question about the risk side of things, we are not afraid to have a very frank discussion with you about this, and we won't sugarcoat it. So don't be afraid to talk to us about it. All right, so let's get that. Now that that's out of the way, if there's any questions about the risk, make sure you feel free to ask. We'll be here answering that throughout the event. This is a very special event. Rob is a busy individual. As you probably know, if you follow his escapades, he's traveling the world, participating in lots of these online trading or live trading competitions. He's won, I think we're getting close to 30 right now. It's really an impressive statistic. One of the things that I really want to mention here, because sometimes people ask us, customers have been with different educating groups and they've learned from different places. They always ask, is Rob trading a live account? And the answer is he is unequivocally trading a live account. In fact, just for kicks, this morning, I logged into a tool that we have on our side where we can see the activity and how many logins our customers are doing and that sort of thing. Rob hasn't even logged into his simulator since we've been tracking it. So that's something we can say as a brokerage company. I mean, I'm not afraid to tell you that. So that is a really big distinction between what Rob does and what a lot of the other guys out there do. And the reason why is because a lot of the people in the educating community, unfortunately, don't trade live accounts, or they don't trade in front of people because either they're scared to, or they're afraid of losing, or they're afraid of what it's going to do to their business. That is something that Rob is not afraid of, and he's demonstrated that over the course of several years, all through the ups and the downs. So it's really an impressive thing in order to say that Rob has won these trading competitions. It's obviously been great publicity for us because he's using our platform to do it most of the time, which is awesome. But it really is a big deal that he's trading a live account in the trading room every day that he's in there. So if you're in his trading room, you are going to see a live account here. I've never seen a situation where he's been trading a simulator in his live trading room. That is a big, big distinction. So I really wanted to harp on that extra hard today to put any doubts to rest as to what he's up to in there. And I encourage you to check out his service and contact us if you have questions, or if you'd like a more personalized intro to Rob or his team, to reach out to us and let us know. We'd be happy to do it. All right. So with that, Rob, I appreciate you coming into the room today. Thank you so much for taking the time. I want to make sure everybody can hear you okay. So if you want to go ahead and take it, fire it up.
Well, thank you, Patrick. I really appreciate that, gang. It's great to be here with you, Infinity, and the CME. Can everybody go ahead and hear me okay and see my charts okay? You should be able to see my Infinity Dome, and over the morning you're going to see my Infinity Starter Package of indicators. That's these right here. You're going to see my Infinity Professional Package of indicators. That's right here. You'll see my Champion Setups indicators for Infinity. That's right here. And something that hasn't even been released to the public, but is really incredible, at this point, is the institutional trading pack of indicators as well. So a lot of really great stuff there, and everything should be showing up just fine for you guys. And it looks like it is, so that's great. So we're going to go ahead and get right into it this morning. First things first, let's take a look at the markets. We know that we have, we're going to be looking at a lot of CME products this morning, up until this exciting time where the Russell has returned to the CME. The last several months, a lot of people haven't been trading the Russell, because earlier last year, the ICE exchange raised the price up to about $110, I believe it was, per month, even as a retail trading customer. And so that got a lot of retail traders to stop trading the Russell. Then they reduced the tick size to $5 per tick, and so $5 per tick and $110 was just too much for a lot of people, and so now it's remaining at $5 tick like a lot of the other stock indices, but now if you're trading it on the CME, where it's ultimately moving over completely, there's a dual track still right now. So there's volume over in the old one as people are going to unwind positions, because what's going to happen here, in my opinion, is that we're currently trading the September contract for the Russell on the CME, as we are the other stock indices. And so what's going to happen is, since the volume started to go, the activity started to kick up now on the Russell at the CME mid-contract. I think what's going to happen is we're going to start seeing people then, once they unwind their September positions and they roll into the December positions, we're going to see a lot more volume kick in. So now is a great time to learn strategies for the Russell as well as the other CME stock indices, of which I trade a lot. In fact, Patrick can verify my live account. I traded the Nasdaq futures yesterday morning. And over the last few weeks, I've done a lot of Nasdaq futures trades, actually, along with other CME products like crude oil and such. So there's a great opportunity now as the Russell comes back over to the CME, and then the volume starts to roll over, and probably in September, into that December contract. I think then people are going to start seeing that volume uptick quite a bit. Does that make sense? And hey, Carla, great to see you, and great to see all of you this morning. Thanks so much for those nice comments, and it's great to be here with you. Great to be here with Infinity. So we've got a lot of stuff we want to do. We know we've got crude oil coming out here in about 21 and a half minutes. So in the meantime, let's see if there's an opportunity on one of the other markets. As Patrick mentioned, any trades I do, just like in my live trading room, will be on my live Infinity platform here, on the stock index or on the futures side. That's what I'm using, the Infinity platform. And and of course you can tell, I don't know what it says, Patrick, even honestly, as a simulator or demo or trial or whatever, it denotes differently, and it's some sort of baby bluish color if you're on a simulator. So obviously this is my live account. Now let's go ahead and keep an eye on this. Right now what we're getting off the US Open, we're getting a lot of volatility that we see, the typical volatility we usually see in the first 30 minutes of the day. It's why a lot of retail traders tend to lose money in the first 30 minutes of the session, because most days of the month, this is exactly what happens with the U.S. stock index futures. You get spikes down, you get spikes up, so, it's a short, I got to get short. Oh, wait, it's actually a long, I got to get long. Wait a minute, it's actually a short. And people get whipsawed back and forth, and then by the time the market's ready to break into an actual trend, then what ends up happening is they've been so whipsawed. And anybody here ever had that situation where you've just been stopped out with losses so many times that by the time the real move is ready to come, you're just not even willing to trade it. You're just exhausted. You've lost money. You've had too many psychological hits back to back to back. And so what ends up happening is you're doing the best you can with the tools that you have, the knowledge that you have. And so you're shorting, getting stopped out. So it's like, oh, wait, it's actually going to be a long. Okay, I got to get long. Then you get stopped out, and so it whips back and forth, and by the time it finally gets moving, you're like, they're not going to get me again. I'm not going to lose again. And then you're stuck holding the bag. Okay, so a lot of people, and I appreciate your honesty. We've all been there at some point in our trading career. Unless this is your first week and you're in that darling honeymoon phase where you haven't experienced those things yet, but over time, then you got to get through that. You got to have those losses, and then you've got to go ahead and get on the right tracks. And so it just takes time. So it's a huge psychological component, not just the tactical. So what we're looking at right now, I'm focusing on the stock indices, and what we're seeing on the U.S. stock indices side, S&P, we're above the speed line, so it's taking off a little bit earlier. The Russell above the speed lines, taking off. Now this is the old data. What's nice is some of the markets, like with Infinity, if you go to Infinity, you can actually see how they they've, in fact, let me just show that for you. The Infinity with the Russell here, they've actually superimposed, previous data. So it's kind of nice that you can see that. Some of the platforms have not done that, and so you can't get past data to merge in. So going back here, so for the moment I have to have both on my, to look at past historical data on the old indice off the X exchange. But again, that volume is moving over, so make sure you're learning how to trade off the RTY. RTY, that's going to be the Russell 2000 on the CME. That's where you're going to want to cut your teeth, in learning process. So the Dow here is at the speed lines. Now that's problematic. Because wait a minute, the Dow, which is the sister or brother, depending on your preference there, to the S&P, but we got the S&P up above, but we have the Dow down below. So that's problematic. The other major challenge that we have here is going to be this 5,900 round number resistance that we're struggling at right now as I'm speaking on the Nasdaq. Okay, so we see that's a previous high right over here, and that's what we're struggling. So we've used up all this rocket fuel, all this energy to get to that point. Now where's the energy going to come from to actually break through? Does that make sense, everybody? That's an important thing that you need to know, especially when you're not getting assistance from, like the S&P's, sibling, the Dow here. It's struggling right there at a key resistance. That's problematic. Okay, and then we take a look at distant cousin, the DAX. Okay, on the European side, it is buried down here in resistance land. So we have all these challenges that are right in here at this time. So and by the way, I see a lot of people asking questions on the speed lines. I don't have the link. I'm sure Patrick and the Infinity team will be happy to put the link in there. You can actually get access to those speed lines, and several. In fact, I can just show you here. Right here, you can get access to those speed lines and some of the other things for like 30 days as part of your Infinity trial or Infinity membership, and so on and so forth. So talk to your broker there. Patrick, I'm sure, can put in the link for you in the Infinity team. So for all of you that are asking about that, right through here and these different tools down here, you get access to those for 30 days through Infinity. Okay. So hopefully that clears that up. Now, so getting back to this, so what I'm focusing on here, does anybody see actually a lot of consistency between the stock indices? We have one that's, let's just do the math on these. We have one that's very bullish, that's the S&P. We have the Russell is very bullish. We have the Dow that, while it's an uptrend in the backdrop, is below resistance. That's a problem. We are at resistance on the Nasdaq as well. That's a problem. And we're outright negative on the DAX. What does all of that basically equal? Not very good math for continuation at this moment, does it? Okay. And then we take that, combined with the issue of what we have on the VIX, okay? So let's go ahead and just talk about the VIX for a moment here. So where the VIX is at, if you notice, we're at 9.69, 9.69. That is huge. I cannot emphasize, that how huge that is. Let's just kind of put the math out there so we can just see how huge that is. We have to go back here. In fact, I'm going to do that for you right now. You can see we've got to go back to 2006 to see a number that low. We have to go back to 2006 to see a number that low. And then before that, we didn't really see numbers that low. That this is the lowest we see. So back over 10 years ago, and by the way, what happened afterwards? Well, we kind of know, didn't we? We got a lot of volatility and a lot of selling, didn't we? So these are really important things to understand. So right now, what we're looking for is I'm still willing to take longs I'm very willing to take shorts a little bit more aggressively than I am longs when it comes to like the stock indices. Now, on bonds, gold, things like that, I'm going to be looking more at the long side. Shorts on the stock indices, I'm more aggressive on than usual because of that super high VIX. If you guys recall, recently I got a thing I should pull up for you. Give me just a moment here. Just doing this all live in real time for you here. Nothing's pre-planned, gang. So pulling some things up for you. Yes, super low VIX. Super low VIX. That's that number that I just showed you, the volatility index. We can see just how fast these markets can go ahead and sell off. For instance, we take a look. I want to pull up something on a presentation for you, and it's just taking a moment. But this was because I've kind of been tracking some of the different trades that we've been doing recently with some of the strategies that we've been using and focusing on. And so in that process, we had a couple of days here, like right here. Okay, so this was the Thursday before the 4th of July weekend. You see just how fast institutions were willing to go ahead and take risk off. Okay, every time we had the green dots that broke down below and the sell dots were kicking in here. These are my champion setups indicators that are on Infinity. We went ahead and we'd push down and we'd break down to new lows. Okay, but it wasn't just a day like that. You remember that we had the situation on the 26th of that week. We had the situation with the Supreme Court announcement. Look how fast they were willing to go ahead and tank this thing down. We saw the situation here with the president's son and the news that came out there. And I believe that was here on the 11th, if I recall correctly. So we were focusing on long side trades, and then we backed off of the long side trades, and the market started going to sells and just aggressively pushed down as that news was breaking. So with that being said, the market's very willing to take risk off here. So that's one of the reasons why I'm focused on the the sell side just as much. So this volatility is very important right now. We're at 9.7, so very low. So in other words, any sort of bad news comes into the market, it would be very easily for these markets to push back and sell off. Does that make sense? Does everybody understand why? And as I'm looking at these situations where I'm at resistance, I'm below a bunch of resistance. Okay, I'm not so quick to jump in here, which is something that a lot of us do on the retail side. And then what ends up happening is all of a sudden we see the U.S. Open, the market looks like it's pushing a certain direction, particularly one that's kind of somewhat against the grain, as we were just talking about, like for the long side trade. Then all of a sudden we can't be surprised when all of a sudden it turns right around and whips back against us, especially as it's hitting key resistance like pivot points, daily, weekly, monthly pivot points. And that's what you see right here. And those are available on the Infinity platform as well. So with all that being said, I just kind of wanted to set the stage for you to let you know with the math that we were just looking at, we've got a real mixed bag of nuts. Does everybody understand? I'm just trying to set the stage and help you understand why, rather than just saying, oh, this is a mixed bag of nuts, and it's like, well, what does that mean? I'm trying to help you understand and learn, just like I would as if you guys were all in my live trading room. I'm not just trying to fish for you, I'm trying to go ahead and teach you to fish. So kind of looking at the math there, and this helps us understand why we could expect a very choppy, volatile environment in this condition, okay? So with all that being said, let's go ahead and take a look at what's hot, what's not here for these morning markets and where we can get some live trading done. Other than some nasty flooding and the 4th of July holiday time frame there, well, like I said yesterday, I was firing off multiple trades, DAX and Nasdaq. So look to see if we can get some things done here. All right. Okay, so euro probably not going to happen here because we're down below the hourly chart. And by the way, those of you that were asking what we're looking at here, all this is a 2-minute chart, a 5-minute chart, a 15-minute chart, and then you got some horizontal lines on there, which are pivot points, the hourly chart, and a daily chart. So it's basically the same information on all the charts with the exception of the 15-minute chart also has pivot points. And that just goes back to since I've been trading way back in the 90s. I used to have 15-minute charts and higher back in the 90s. And so I went to lower time frames over the years as electronic trading came in and more algorithmic programs and so on and so forth. But I've always kept that on the 15-minute chart. So I'm just going to take a look at some of the other indices and instruments here to see where we might be able to find some trading opportunities. I'm hesitant with the S&P, despite the fact it's above the speed lines, because the Dow, its sibling, is not coming along for the ride. And by the way, did anybody watch yesterday the Dow? If you watched the Dow yesterday, that's another great example of what I'm referring to you. Whoosh, right down the pipe, right? So remember what I'm saying. I just want everybody to remember this because I've heard of some stories of people trying to catch that falling knife right now and buy dips, buy bottoms. But the market can remain wrong a lot more than your account can remain solvent. Okay, and so it's real important that you understand that. So I want you to understand the environment that we're in. So when you see a situation like that, you kind of remember because this is, for instance, what happened yesterday, where the markets went ahead and pushed down, just fell off a cliff temporarily. Everybody see it? We got some really good sell signals going there, and this thing just died a horrible death. Okay, so with that being said, you're hearing a theme that I want you guys to all be concerned with, because I want to see the best for each and every one of you. You're either a student of mine here today, or you're a student of the Infinity family, or as many of you are, you're both. You're using the Infinity platform and trading in my live trading room. So with that being said, we want to see the best for you either way. So just keep those things in mind. So let's go ahead and I'm going to kind of move over to a couple gold. I said, or crude oil. I'm sorry, crude oil is going to be off the table here for a little bit longer because we've got the big news coming out, and I don't trade the news on that. As many of you have found out the hard way, that tends to go ahead and be hazardous to your financial health. So just looking at a couple other instruments. Gold, a little bit of a mixed bag of nuts here right now. So we're going to fight through this. So right now we're at key support on the 2-minute, we're at key support on the 5-minute, key support on the 15-minute, key support on the hourly, and the daily is caught right in the heart of the channel right now. So we've got rising support underneath of us, makes it a little difficult to take the short, but the short-term charts, the 2-minute chart is actually down. So not real excited about taking a long side trade against that short-term freight trade. Okay. Yes, exactly, Martin. The daily is what I refer to as the kill zone. So you got the falling resistance on top, the rising support underneath. Exactly. All right. Let's go ahead and take a look. And by the way, it looks like there's some questions there. I'll be happy to go ahead and answer some of those as we go. Do you trade the indices during the final half hour of the New York Open? The New York Open. Okay, so basically the bottom line is regular trading hours, the last half an hour. I tend to trade it more up until about the last 15 minutes. So that would be 2:45 Central Time, 3:45 Eastern. I tend not to go ahead and trade it quite as much that last 15 minutes. In fact, Patrick was kind of talking to you on the educator side about a lot of these guys using simulators or not showing their live trades and that. One of the other things we see a lot of times where people have shown you guys trades where they put on a trade towards the end of the day and then all of a sudden it's losing money because they get caught on the wrong side of it, which is easy to do in those last several minutes when risk management portfolios are being rebalanced. what looked like a great long can also turn into a short, and vice versa. What happens is that trade will just disappear. You'll never hear of it or see of it again, and that happens a lot. People putting on those trades right there towards the end of the day in that time frame because they can get battered around pretty badly. So I tend to avoid that last 15 minutes as a rule. Okay, there's always an exception to that rule, but as a vast general rule, yeah, that last 15 minutes in particular is avoided for me. So not necessarily the 30 minutes, but definitely the 15 minutes. Okay. All right. So as we go ahead, and I just want to look at the bonds. Kind of caught in a mishmash here. My short-term target, if you guys recall, on a day trading side, if you guys watch some of my nightly videos, and that was 154. So we've kind of hit that. So the plan I laid out, like in the trading room yesterday, was that we would look for short-term day trades until we got to the 154 level, but then we need to get above the 154.12 to look more at not just day trades, but then more swing trades. Got a lot of resistance here in the very short term, and I'm looking to get through that. And then from there, we have a lot of room to grow back up to some previous recent highs. So right this minute, there's nothing to do with the bonds unless you're trying to scalp for a tick or two. The big picture, in my opinion, is getting above 154.12, showing that's now support, and then we could see some really nice opportunities both on day trade and swing trade basis from there. But right now, as we can see, we're basically like on the 15-minute chart here, just sideways and technically damaged, bebopping around. So I'm spending a lot more time talking through these things because there are several people here today that are not in our live trading room. And so I want to go ahead and make sure you understand my logic of what I'm looking at versus just saying, oh, we're sideways technically damaged, and everybody knows what that means. So, okay, gold, we kind of talked about this hodgepodge here. Let's go over to crude oil for just a moment. And remember, crude oil's got the news coming out here in about a minute and 20 seconds. And of course, it becomes very volatile most days at that time. So typically what I'll do on crude oil is let it settle out. Now, what I'd like to see here, my preferred strategy on the crude oil at this point, given the fact of where the trends are and aren't, the hourly chart is sideways and technically damaged, means just whipping back and forth through the channel there. We're technically damaged on the 15-minute chart. We're sideways and technically damaged, basically on the 5-minute chart. So we got a lot of whipsaws back and forth in here. We can see it even on the 2-minute. So I'd like to go long on crude oil, but what we're going to have to do is we're going to have to get above this 47 mark. That's going to be a key round number resistance level. So I want to push through that, see if this news will allow us to push through it, hold, and then we're going to look for targets, as high as 48. Now, once we get to the 48, then there's double long-term resistance up there, and we have to, I have to, from back off until we get then above roughly the 48.20 area, respecting what I call the 80-20 rule. So we're going to be looking at that. So we'll see how this shakes out in the next few minutes. That report is actually going to be coming out here momentarily. So we see, that's what I'm saying. We push up. That's what with this volatility, we are gravitating towards levels I'm going to be interested in trading. So now what we're going to do is with crude oil proper. So most instruments after news releases, I typically focus on waiting approximately 5 minutes, 4 to 5 minutes before executing a trade. With crude oil, it's a little bit different. With crude oil, we end up waiting approximately 15 minutes because a lot of times what happens early on ends up getting reversed. So give me just a second here. I'm just going to shut everything down and restart it on the chart side there. All right. Placing bets where it's going to wind up, huh? Okay. All right. Well, the good news is we're heading the right direction because why do I want it to go ahead and why do I want to have it go above 47? What's the reason for focusing on that? That's right, the resistance factor. Very good. Okay. All right, so we're going to go ahead and let that settle out for a few minutes, and then we're going to revisit crude oil. Let's say usually wait about 15 minutes, and we're going to see if we can hold that 47 area and turn that into a trading opportunity. Okay. All right, and then on the stock index futures here, we have the same situation as earlier, S&P and the Russell most bullish. The Dow is holding the resistance. The Nasdaq is holding the resistance. And the DAX, while coming off the lows, is struggling still. It's got a lot of resistance down there, above us. So we're focusing here primarily on these CME products this morning, and rightfully so. Those have the best opportunities from my perspective. Yeah, we had to shut down and restart there, so I had to reset a couple things real fast, so just take a moment. Yes, I do, Michael G. Okay. All right, so the now we got that restarted. Let's go ahead and take a look. So we have the crude oil contract on your Infinity platform should already be well transferred over. They do that automatically for you, which is kind of nice. And then the other contracts here, so we're right now moving over to the September contract. So so what we're looking for is I don't want to just, as a rule, I don't take these trades right into the news. I usually wait about 15 minutes because a lot of times what we see is whatever happens in the first 15 minutes gets reversed thereafter. And so with the amount of chop that we can see back and forth, I tend to hold off on that. So, and that's what we're going to do right now. All the above in different ways, Michael. So if you have questions about it, happy to talk with you about it offline. So, but like for my futures trading there, you're gonna see those executions typically be in the Infinity platform there when I'm looking at just futures there. Okay. All right, so going ahead and keeping an eye on this. And then meanwhile, let me go ahead and get back to, I'm also watching a couple scanners on the Infinity platform that we have. which are very nice. So I'm kind of keeping an eye open on what else is hot. So obviously we can see the crude oil is working real well right now. So we see a lot of green on there. So I'm looking to see what else might go ahead and be firing off. You see there's not really a lot firing off right now except for crude oil, but crude oil is in the middle of its absorbing its news. So that's why I'm not just jumping right on there, but I am watching these great tools through Infinity here on the scanners. Get those out of the way for the moment. So just wanted to show those to you real quick. So you see we already have come back significantly from that initial burst. The average retail trader stop loss in the crude oil is 12 to 20 ticks. 12 to 20 ticks. Okay, which basically means in English, if you bought up here near this high, 47.38, you've already had a full max stop loss. But see, this is what we were talking about with this strategy. Okay, so I'm flipping through a couple other instruments here. And by the way, gang, what happened with crude oil? What did I just warn you about a few minutes ago? Isn't this what I just warned you about? You see why it's important to have rules? We talked about it in advance. Exactly. It died a horrible death. Exactly, Lou. All right. Is that making sense? What did we talk about here that could happen with the crude oil? A lot of times what happens within the first several minutes gets reversed. That's why I tend to stay away from that. Jay, the 2-minute, 5-minute, 15-minute, hourly, daily. Chasing breakouts does tend to be very painful for the average retail trader. That's right. Because what happened is you're talking a full-blown, that just dropped back there almost 60 ticks. The average retail trader stop loss is 12 to 20. DEX, from my perspective, yes, it is common for those two instruments to go ahead and see a lot of similarity. Okay. No, I am not in an active position at this time. You will be the first to know after me because you'll see it right there on the screen as I do the trades. So what I'm watching is this volatility in the crude oil. Looking to see now, can we hold this 47 level and actually gain some ground here? So right now, we talked about this daily resistance. And what happened was the news allowed it to spike through. See, when news comes out, all bets are off. Technical strategies go right out the window temporarily. But then after the cooler heads prevail, the markets tend to find themselves back into an equilibrium, and then the technicals become very important in that process again. So that's why I tend to stay out of news, because you can see a lot of irrational behavior. Yeah, so as far as the Russell, again, I think what's going to happen with the volume is the problem is the contract opened up right when we're in the middle of a current contract. We're in the middle of the September contract. So I think what's going to happen is we're going to find ourselves in a situation where the volume is probably not going to start rolling over much more heavily till people have to buy their next round of contracts. So the December contracts, which will happen here in a few months. All right, so I'm just keeping an eye on while I'm talking with you guys here, looking at the scanners that I showed you, and as you can see, there's not a lot firing off right this moment. So what I'm looking at here with my Infinity platform, I'm looking at my scanners. You guys see this? There's not really anything firing off right now. You guys following me? See it? So I'm watching the scanners here. We had the crude oil, but I warned you that the crude oil was in the middle of the news release, so we don't want to count that. But does everybody see what I'm seeing here? So what I'm looking for is for some things to start firing off there again on some of the different instruments we like to watch. Okay. So just keep that in mind. That's kind of part of what's going on here. And as we give you an update from where we were earlier, we're more or less a doji star on the Nasdaq, so it's pulled back even more. DAX gave back what little gains it had, gave back underneath that resistance. The Dow is still right at the speed lines that I warned you about earlier this morning. So, and the S&P has taken away some of those gains that it had earlier, have now come back. So is this making sense? All the stuff that I told you guys about 45 minutes ago, we're seeing it here. And this is what I do every day in the live trading room. I talk about these things, in advance, and then they typically happen. So that, it gives you a good heads up and warning and trying to teach you something there along the way. So what I'm doing is I'm watching the crude oil. I'm going to put the crude oil dome back up here. Again, we're on the September contract. Let me get the Russell off for now. So we're fighting right near the daily speed line, or the daily pivot point, not the daily speed line, daily pivot point. So kind of watching how this fight's going to play out. Do we build a base up here above these speed lines and that, and then give us room to grow back towards the 50, 60, 70 area? But we saw that huge spike in volatility that settled in a little bit ago. Completely eaten up long-side traders who got cocky. And so now we're looking to see if we can build a legitimate base here, give us something to launch off of. So crude oil continues to be one of the few things that's really moving here. So that's why I'm focused on this one heavily. We are just now getting past that first 15 minutes, which is kind of my hands-off time frame. So what I'm going to do here is I'm going to put an order out to go long at 47.21. 47.21. Okay, they just went ahead and filled that. So still seeing plenty of volatility at this time. Even 15 minutes in, we're actually seeing plenty of volatility. Let's see. Is it promising for crude that didn't take out the 1030 low? I assume that means the 10. Are you talking about actually this? Are we actually referring specifically to the 1030 low, or we like afterwards this whoosh down? Okay. Well, the reality is the I suppose that the fact that it kind of came up with some accumulation bars back to back here, but there's a lot of volatility in crude these days. Okay, so the what I'm looking for here, I'm looking for this, to try to ideally I like to have this hold the speed lines and then start pushing up here, more to these higher levels. But this whole area now is one big fat layer of support. We have rising support underneath. So the fact that we did push down here earlier, it said if that hadn't happened during that first 15 minutes, I would have actually taken that whoosh back. Does that make sense? I would have actually taken that for an initial entry. I still like this, even back down here into rising support because we have multiple supports. I'd show it to you here, but I can't do that without freezing up the screen too much. But I go, oh, that's fine. I'll sneak it in here real quick, just kind of show you. We have a lot of rising support underneath here, okay? Rising support, you have the round numbers support and so on and so forth, okay? So because of that, and because of the post-news environment, I'm giving this a chance to go ahead and basically I'm just giving it some breathing room because of the higher time frames underneath of us with support. Okay, if we didn't have that support underneath, then I wouldn't be doing that. Yeah, so a small lot trader, from my perspective, these are my opinions only, and only my opinions, not the opinion of the broker or whatnot. But from a small lot trader perspective, they could go ahead and sit there and say, hey, you know what? If we don't hold the speed lines, then I'm just going to go ahead and cut bait, right? So that's a small lot retail trader stop. Okay. Obviously, I'm not a small lot retail trader, but from a small lot retail trader perspective, that is a place we can put stops. So we pushed up here a little bit, gang. You saw that there was a little bit of profit on the board, but I was looking to see if we can actually push higher up here and recheck some of these highs. All right, so it's given me an opportunity a couple times to make a very small profit. The problem is, wasn't willing to go ahead and take this trade on the whoosh down because it was within the first 15 minutes. So it's looking to see if we would, build a base up in this area. It's struggling to do so. So we still have the rising support on the higher time frames. So I've been trying to be patient with it, given the supports underneath. But yeah, this isn't like some of my other trades, where I like to see it work nice and fast, but not always going to get what you want. Yeah, I mean, basically, we have a mixed group here today. So as far as managing this, from my perspective, does everybody want to see how I just do this for myself, or does everybody want me to just be a a small lot retail trader? What do you guys want to see there? Because for myself, I try to give this a chance to work. Does that make sense? All right. So from a small lot retail trader perspective, then you would probably, in my opinion, be stopped out right down below, because it pulled that back down below the speed lines and this base here. Does that make sense? So keep the stop loss tight. What I'm looking for is, can I go ahead and get a similar to what we had earlier? Either I was trying to get a bigger run, obviously. So I was given it a chance to work. Didn't really give me enough profit to put in a trailing stop into it. So what I'm looking at now is, could it possibly fall back into the key support areas and give me a reentry opportunity here? So as you guys see, I've been trying to be very patient with this. I was looking to see if we would push off here and become a bigger profit. That's always one of those things that people struggle with. Yeah, the problem is we shot up so much here earlier into the into the moon, then kind of pushed down into this 20 area. And I was looking to see if, okay, that's where it's going to build this base based on what I think I got called the 80-20 rule. So, but it's just not going ahead and following through yet. It's still bullish underneath, which is why I've stayed with the trade. Given an opportunity, trying to give a bigger payout. And by the way, just in the interest of accuracy, not to go ahead and be greedy, but because in a situation like this, there is a legitimate opportunity. Does everybody see that the opportunity for the room to grow here on the daily chart? And so, yeah, this isn't one of those trades of mine where I get in, it just goes ahead and whooshes right away, all that good stuff. But in the bigger picture, there's a lot of room to grow opportunity. Earlier, we saw a willingness to get up into these prices. So what I want to see was, will we pull back here and then try to resurge and retest those prices. Why not add? Well, I'm willing to add under certain circumstances if I'm going with a trend, not against a trend, so on and so forth. But the thing is, I usually like to do that right down into key support or resistance levels. And we're not really at those support levels. So right now, I'm just letting the trade go ahead and work on its own merits, being that we have the 2-minute charts up, the 5-minute charts up, the 15-minute charts trying to come up. But there are some definite challenges here that we're having as part of this process as well. So yeah, since we pushed down into the 80 area earlier, I'd much prefer, the trades I like to go ahead and usually do that to, as far as like an ad, I usually like to see a whoosh down into the key supports. Those usually give me the best opportunity then to be profitable with that kind of trade. So unfortunately, not one of my trades that we can be in and out of quickly, but there wasn't a whole lot going on at the time, other than the activity in the crude. And since it does have the rising trends underneath, went ahead and elected to trade this one. But that's okay. This is trading. This is how it goes. Not every trade is going to be that quick, one. And I know my traders love those where I get into a trade, have it whoosh, some of the trades we've been, hunting recently where, we get, identify a trade right before it explodes. Well, people love those, right? Who doesn't get in, make a bunch of money or whatever real fast if you can? I think yesterday, what was it, Nasdaq, gang? Some of the traders getting a 30-tick spike or whatever, or 30 ticks between the contracts, whatever they were reporting, and so on and so forth. That's all great, but the not everyone's going to be a quick one. No, it definitely does not, Priscilla. The market does not want to work in our time frame as fast as we'd like to work. So it would have been nice, to glaze days in a maze, but that's not the real market. A lot of times the market's just boring. The reality is. So if I'd gone ahead and added in down here, yes, that would have gone ahead and been profitable, but it didn't do it with my rules. So did not go ahead and do that. And, I'm fine with that. Like I said, right now, I'm just focusing on the fact that we have the rise in support underneath and kind of biding time, looking for this, see if this will, catch up underneath of us. But as I mentioned, from a small lot retail trader perspective, could long since be gone. And again, it did give me an opportunity to make a small profit, but that's all it was a small profit. So, and it's not that I'm not willing to go ahead and take a trade and then scratch it or take a small profit out of it. And that's an important point. That's a real important point. There's times where I'll go ahead and I'll take a profit for way less than I expected to get out of it. Okay. But I'm going into it with an intention of having a certain amount of room to run. And so I'm going to give it a chance to perform. Does that make sense? Jay, I thought I answered that question earlier. 2, 5, 15-minute hourly and daily. 2, 5, 15-minute hourly daily. So, Jay, did you hear it that time? Yeah, so from my perspective, Steve S. exactly. So from a small lot type trader, the argument becomes if you don't have a lot of room to plan. Remember what Patrick said earlier on risk and risk management. Now you guys understand I've been trading since way back in the 90s, right? I've been studying the market since the 80s when I was a teenager. I've been trading the markets since the 90s. Does that make sense? So I'm not new to this. Does that make sense to everybody? So, but for a up and coming new small lot retail trader just opening their accounts, or perhaps a person that has been struggling for years, could be any of the above. The reality is that Patrick talked about that margin that they offer, which is incredible. And to their point, they're absolutely correct. They give you that really great opportunity on an intraday basis with intraday margin to really have extra value in that to your money. But the reality is that just because you can doesn't mean you should. Okay. Well, so same thing on a small lot retail trader side on a crude oil announcement, type day. Even myself, I have a rule. I typically try to wait the first several minutes after the report. Does that make sense? So, and that's me. So for a small lot retail trader, does it make sense potentially to wait? Just skip the crude oil that particular day. You following me? And just let it pass, let it go, because of the news involved with it.
Hey Rob, I have one question / comment I could make if that's okay with you.
Go ahead.
Okay. So one thing I sometimes this comes up occasionally when I'm talking to my live clients, because obviously we have, as you know, a very wide mix of individuals, and some of the folks here, want to see things from their perspective. They got a small account. Other people want to see things just how you would do it. It's sort of a mixed bag, as you said. But what about someone who, if someone wanted to, try to get their head wrapped around the importance of rules? And I understand too, and I'm sure you understand how someone who's new to this might see the discipline with which you adhere to these rules could be viewed as frustrating for someone who doesn't understand what they're doing yet. And the idea would be, could someone like that, who's part of your room, taking your class, and let's say they are looking at crude and you're looking at crude, and this guy doesn't have a lot of trading experience yet, and he knows that you're, cautiously approaching this market because there's news, and there's a chance that you might want to get long one, but you don't, but the customer doesn't know if he is capitalized enough to be able to, re-enter the market or even, take a, 20 or 30 tick stop. Could he patiently wait for you to look at a second opportunity to get into the market like you sort of are doing now and wait for that one?
No, well, that's a really good point. Yeah, no question about it. In fact, sometimes my secondary opportunities that I look at are way better than the first ones. In fact, how many of you here in my room today, you actually look at the secondary opportunities that I'll look at for some of the trades and pass on the first ones that I say are a little bit more aggressive, and so on and so forth, and then wait for a more conservative one to go ahead and set up?
Right, exactly. So
look at the answers, Patrick.
Right,
all the time I do.
And I know those guys too who are saying that. So hey guys, but I agree with that. I mean, I think that's an important thing to note, because if somebody's particularly aggressive and they want to go in and do that's something that resembles what you're doing, that's their prerogative. That's their choice. And if they feel they're properly capitalized enough to do that, and they've, they're comfortable with the risk, okay. But if somebody is a little bit more apprehensive, I don't want people to be discouraged at the idea that, you can only do this if you're trading a $500,000 account or something. That's not the case. So
yeah,
that's a really important thing I wanted to make people aware of, or at least remind people.
Yeah, so I went ahead and just a couple things. The reason why I stayed with this as long as I did, I gave this a chance. What this should have done here is this should have exploded. I gave this a chance to go ahead and explode, and we have like my champion setups, and that went ahead and was, of course, one of those reasons too. So what I have is if we have a red dot in a downtrend, or sorry, red dot in an uptrend, we look to go long above that. But since I was already in the position, I couldn't look to go long in the uptrend. I was already long. Now, yes, I could have gone ahead and added in the position, something like that, but I couldn't take an initial entry. That would be for a trader who wasn't already in. See, and that goes back to the whole small lot retail trader perspective. So I used it as a reason to stay in my trade. For a small lot retail trader, they can use that as a reason to get into a trade, right? How many of you are familiar with my champion setup strategies? So if we have an uptrend, okay, if we have an uptrend, what we're looking for is green dots in an uptrend to go long at the close of the bar, or red dots break one tick above the high of the red dots in a uptrend to take a long. How many of you are absolutely familiar with that? Anybody that's in my trading room, obviously, and so Patrick, you could see all the yeses and me's and all that flying by. Look at that. That's a lot of yeses flying by, isn't it? So I'm not sure if Patrick's still there. Sorry, gang. But the reality is, anybody here is familiar with my champion setups. A red dot in an uptrend, we look to break back above for a fresh entry opportunity, right? So in my case, since I was already in, I didn't use it as a fresh entry opportunity. I went ahead and used it as an opportunity to be more convincing to continue to stay in the trade. So what we did here was we got back up here to this level and we hit it, and you notice I didn't go ahead and pull it right away. We hit it again. I didn't pull it away, but then we hit it several times. Now there comes a point where you got to sit there and say, how many chances am I going to give? Let me ask the question a different way. How many of you have ever been in a trade where the market gave you a chance to get out either scratch or with a profit, and you didn't take that profit and then turned it into a loss? How many of you want to be honest enough to admit that? Yeah, and I'm not sure if Patrick's here, but the reality is lots of yeses, lots of many times, plenty of times. Oh yes, here, me with exclamations. Lots of the thing over and over again.
Yep, I'm still with you, Rob. Just duty calls, from time to time.
Oh yeah, of course. Oh yeah, I know you're doing the broker thing. Well, so what I was asking was, how many of you have ever had a chance? Because what I was talking about, Patrick, was the first question I asked was about the champion setups, which you're very well aware because a lot of students have called you asking about them and setting them up. Well, so what I was, in an uptrend, we're looking for red dots to be broken above. Those are fresh reentry signals. So what I was saying was, that was one of the reasons I stayed with the trade at the time, because I just had fresh buy signals. Okay, so I stayed with the trade. Now, if I hadn't been in a trade, this would have been that re-entry opportunity I was just talking about, right? Okay. So as small lot retail traders, that is a classic Rob Hoffman entry using my champion setups indicator, isn't it? So right there, when we ask that, so you go one tick above the high. So here's the high of that bar that made the red dot. You go along one tick above. So that's 47.13. typically what I'm looking for is at least $100 per contract or more of opportunity. Just like when I took this trade earlier, I was looking for 47.30 or higher. So the what ended up happening here was that so I stayed with the trade because it had that buy signal. Now what happened was it got back up here, and I gave it a chance, gave it a chance to break, and it just didn't. And so I went in, I moved my trailing stop up underneath, which it then hit. Okay, so it didn't explode up to the 30 and beyond area at the time. It went ahead and hit. Now it finally did hit my target, initial target, just a few minutes ago, but when I went ahead and gave it, so what I asked was, how many of you have ever been given the opportunity? So that's what I asked Patrick, was how many of you have ever gone ahead and given a market a chance to make money, and the market, but then it fell against you, but you stayed in for the right reasons, but then, or your trading plan and so on and so forth, but then the market gave you a chance to get out either with a profit or scratch, and then you didn't take it and then turned the trade into a loss, and then that's where you saw the screen fly by the second time.
Right.
It was the that's when I think you came back in, talking about the second time where people had a chance to get out. So I gave this a chance again. So we had the buy signals down below on the champion setups, and I was showing that on the Infinity platform. So it did do what it was supposed to do. It rallied it, but it rallied it back up near my price. Well, then it gave me a chance to get out, gave me a chance to get out, and it wasn't breaking through. I really thought that after we would push back up here, that it would rush towards 47.30 a little faster, because all the people who got shaken out down below, I mean, you saw even some of the comments from nervous small lot retail traders all panicking there. Well, that's when they get flushed, right? What did I tell you guys earlier? What did I tell you was the average small lot retail trader stop loss? What did I tell you was the average small lot retail trader stop loss in the crude oil? Okay, good. I'm glad to see some people that are students and other people that are not students. 12 to 20 ticks, right? Well, so it came up here to 23. It fell down here, one tick past that stop loss level, didn't it? Isn't it funny how that worked? Went right to 21 ticks, stopped out retail traders, and then went right back up again. Yeah, people saying that always happens. Well, that's what we're talking about here. So it flushed out the retail traders. So then it came back up, broke above my buy signal, which, and by the way, the dot is displaced. The stop loss, or sorry, the entry is one tick above the high here. So basically 47.13, one tick above the high of this bar, which is 47.12. So then I had fresh buy signals, which went ahead and carried it back up to my area. Now it went through, it traded a handful of ticks my direction, handful of ticks my direction, but didn't break through. Now at that point, then I went ahead and said, okay, listen, I've been patient. I've been giving this a chance to run, but my target was at least the 47.30, ideally back to 47.40. But usually, as anybody in my trading room knows, I go into a trade with the intention of trying to make $100 or more per contract. Okay, so if I'm getting into a trade for one contract, I'd like to see $100 ideally out of it. If I'm going in with 10 contracts, which people will see too, I'll go in with, looking for ideally for $1,000 on the trade. So the point is, so I was giving it a chance to work and work and work. Now what ended up happening was it just kind of sat here for several minutes, not breaking through. So finally I just put the trailing stop in when it had the last pop, and then it popped up, stalled again, hit me out, and then it kind of sat there for a little bit and then finally hit the 47.30. Am I upset about that? Did what I expect to have happen in the big picture happen? Yeah, it did. It did push back up here, but it didn't do it I was very patient with it, gave it a chance to go ahead and work. But at least I had a strategy. I had a plan. Okay, and that's what a lot of people are missing. in that situation. Now, the other thing I was looking at here was, if you notice at the time, let me push this back for you, okay? We were making a higher high in price here as we were retesting my levels, but what were my indicators doing? What were my indicators doing? And many of you here that have Infinity have these indicators in some sort, whether it's my Pro Pack or whatnot. In fact, what I'll do is I'll just look at this as my Pro Pack. And Patrick, you and I have worked together for many years. The students, many of my students are your students, and you're part of your Infinity family there. So you know a lot of the people have the Pro Pack, and this is the Pro Pack here. Okay, so let's take a look at the Pro Pack. What was it doing at the time, gang? So let's push it back over to where we were. Okay, so we were making a higher high in price, but what were we doing on my indicators? What is that called? A negative divergence. Exactly. Very good, gang. A negative divergence. Okay, so whenever we're trying to break a key support or resistance level, what is one of the things you do not want to see in your trade? When you're trying to break a key support or resistance level, what is the one thing you don't want to see? A negative divergence if you're long, and a positive divergence if you're short. So basically, you don't want to see a divergence against your position, okay? If you guys follow my nightly videos, you guys understand that as well. All right. So let's go ahead and, all right, so let's go ahead and go back over. All right, so I gave it a chance. It did hit the target, but took a lot longer than expected, and with negative divergences popping in there. In fact, you can see what happened since the negative divergence. It did have that last little hurrah, but it did so with the negative divergence, and a lot of times that implies deeper selling coming now, okay? So, and by the way, is there anybody in here that always gets 100% of every profit that they go for? Patrick, do you got any customers that always get 100% of every profit they go for?
I wish I did.
Okay.
I really do.
So, and look what's happening. So I talked about the negative divergence here. And I said it usually implies deeper selling. And now we're starting to see that selling. Okay. So did I get the full $100 per contract that I would have liked? Nope, I sure didn't. Am I okay with that? Yes, I'm okay with that. Again, as I asked that question earlier, how many of you have ever tried to go ahead, get a little bit more out of your trade, and so you stayed in a little bit longer and then turned it into a big loss? My biggest loss in my trading career, Patrick, you remember several years ago, my biggest loss in my trading career, I actually had a profit, but I was being a jerk because I'd had several, like I had this huge run up for this super long time, and I was getting all these big profits. I was getting a lot of really nice profits along the way, and so I wanted about $8,000 more on that trade than I had for profit at the time. And ended up going ahead and look what just happened here, by the way, gang. Look what just happened. See it? I told you that set us up for a deeper loss. So did I do the right thing, pulling the plug, even though I didn't get those last several ticks that I was looking for? I just put the trailing stop in and said, well, it either hits my target or I'm going to go ahead and just let it come back and hit the profit that I have. Did I make the right decision in hindsight? So I've been doing this for many years. I am far from perfect, but there's a lot of things I've learned along the way that can help a lot of you. So, I wish every trade was, just a humdinger, get in, have it explode up. Certainly I've had plenty of those, or explode down in a short, but not everyone's going to go ahead and do that. But in the big picture here, I made the right decisions there. And everything we talked about kind of in advance ended up playing out here, including this deeper reversal. So there's a lot of opportunity to learn. Futures has a lot of risk, stocks, options, Forex, coin investing, real estate, any investing has a lot of risk associated with it. But I really love these tools, these instruments, because just like I did right here, every trade that I take, win, lose, or draw, I do it right there on the screen, live in front of our students, and I don't close out the trading room until I go ahead and by the way, this is not a promotion for the room today. This is we're featuring CME products today. We talked about the Russell. You heard my thoughts on the Russell. I think the volume is going to increase there. As we go ahead and progress into the December contract and such. So it's great that you guys no longer have to pay those extreme fees to get access to the Russell. So that's great stuff. But what we're talking about here is the real world of trading, and Patrick alluded to that at the open here. And what's nice about the futures, I can get in and I can get out very quickly. And so with the futures, within the couple hours that I do the live trading room each morning with people, I can close out the position before the room closes. So there's no hoping and wishing, what did he do with that position? There's no wondering, you know exactly how much I've made, or if I were to lose before the room closes. That makes sense? Okay. So Justin, here's the institutional indicators right here. So there's a lot of things included with those. And then here is the champion setups. Okay. Do you consider RTY participation too thin to trade? So the thing is that let's go back and look at the RTY real quick. Okay, so here's the RTY dome. So the dome is definitely firming up a lot more. Bids and offers have been tightening. More and more volume is coming into it. For a small lot retail trader, especially one that's going to, in my opinion, hold 15 minutes or longer, if I'm trying to scalp, I probably wouldn't be, scalping it at this point yet. And if I want to do, a large contract retail size, where I probably wouldn't go ahead and do that quite yet. But what I do think is very important here is, make no mistake, the RTY is the wave of the future. The volume is going away from the TF over on the ICE. It is going to discontinue trading. So right now, there you got this parallel track between the two. You have the TF on the ICE, which has still got activity on it, and then you have the RTY. And so, which is one of the reasons we're actually here today. So it's great that I was able to trade another CME product and hit a lot of important topics here. But let's just cover that. So to answer the question, from a small lot retail trader perspective, if you're holding if you're not trying to scalp in and out, second by second, if you're actually holding for 15 minutes, 30 minutes or so, where if you have a tick of slippage, or there's a little bit of a bid offer gap at that particular moment, especially like in early hours, that the overall trend can still carry you through, then I think it's an opportunity right here and right now. If you go ahead and are looking for, because here's the current bid offer. As you can see here, there's some size out there. Okay, so if you're a small lot retail trader, you can get something done. Does that make sense? So the key is to focus on what the main trend is. So just like I did just a few minutes ago, I said to myself, well, the main trend is up, so I'm going to give this a chance to explode back up and break these highs because of the potential. So while I wanted a minimum of $100 per contract, okay, and the opportunity was much greater, so from an overall risk reward perspective, there's a lot of opportunity there if we could have pushed back up through here. So the but the reality is that the overall trend, was my friend, and so that's what I was playing. And then I got fresh buy signals within that trend, which we talked about. Showed you that just a few minutes ago, the fresh buy signals, and so that went ahead and pushed us back up. So same kind of thing. If I've got the RTY going ahead and firing off a good trend here, then I have this opportunity to do some great things as far as not worry about that one tick of slippage. I guess the question is, if one tick of slippage, let's put the question this way. If one tick of slippage is going to make or break your trade, maybe that's not a trade to be in the first place. Does that make sense, everybody? I mean, if you're pushing in there that hard, where one tick's going to make or break your trade, probably not the best trade, in my opinion. All right, so let's go ahead and take a look at additional opportunities. As we look, kind of reset the board, we've got the resistance still on the Nasdaq just above us, and we still have that resistance right now on the Dow, and of course the DAX still has its resistance here. Okay. So yeah, I think now's a perfect time to start looking at the RTY, because you don't want to wait till it's kind of like people quit their jobs and then say, okay, I'm going to become a full-time trader. The best time to learn to trade, in my opinion, is when you still have that job. Does that make sense? So, by the way, did everybody see we had another one of those signals? What kind of trend do we have, and what color are the bars? Green. So what are we looking for? Red dots, in the uptrend. Okay. So that's on the champion setup side. All right, so let's go ahead and see what's happening with Nasdaq here for a moment. Hey, Chester, no worries. So, like I said, trade it when you feel comfortable. Does that make sense? So, from my perspective, I think the RTY, I'll just tell you my opinion. I think now's the time to learn the RTY. And as a small out retail trader that's holding for 15 minutes or more, there's opportunities there. So, if you're the kind of person that's trying to scalp the bids and offers back and forth, which is not my style, but if you are that kind of person, then might be a pass. Okay. Yeah, Brian, I know I'm hitting you with a lot of information, and so hopefully it will go ahead and turn out for you later. All right, so we've got a lot of resistance right overhead on the NASDAQ. We have that on the daily chart, as I showed you a little bit ago. Remember this daily resistance right back over here. And so what's happening is we're continuing to try to punch through these resistance, but the problem is you've got weekly pivot resistance and you have daily pivot resistance right above us. Okay. So you got double Dutch resistance right above us here. That's keeping us kind of under pressure for the moment. What I'd want to see here is, and remember, we've got hourly negative divergence here as well. So what I'd like to see is I want to break through this resistance band. So this is kind of a rest of the day type scenario. since I'm sure we'll start answering some questions, because a lot of people have been asking questions, and I hope and think that Patrick's probably been answering some of those for you guys along the way, and I got some to answer as well. But what I want to do is I want to break above this this band of resistance that I've highlighted right now. I want to show that that's now support, and then go into the afternoon and see if we can push back up. The reason why I'm so sensitive to this is because of the fact that we have what? Something I shared with you earlier this morning that has me very much on edge and is keeping my focus just as much on the shorts as the longs in the stock indices. Well, good, Brian. Brian says, I get it and really like your approach. That's right, the ultra low VIX. Very good, Peter. Excellent. And then a lot of people said the negative divergences. You are correct. There's negative divergences as well. But in that particular case, what I'm looking for is the VIX situation. Okay, so there is negative divergences. You are absolutely correct. But the additional answer that I was looking for there is the ultra low VIX. Okay, but the divergence is very much there as well. You can see here's the Nasdaq. So what are we doing? We're basically making an equal high in price, but a much lower high in the indicators. That's a problem, isn't it? So we have a very low VIX. So any bad news could set this market aflame. And then we have the negative divergence, which again could set the market aflame. We're basically at a major market resistance level. We're at a major market resistance level, and yet the fuse is lit for a potential explosion, not a good one. And so I'm willing to look for shorts just as much as longs, and I'm not as quick to put the shorts on aggressively as I would. So as a small lot retail trader, I would, personally, I wouldn't go ahead. And of course, this is not individual advice to any individual person. This is just my opinions. Like if I had to start all over again tomorrow, knowing what I know now, had I known it then, my life would have been infinitely better, faster. I know that when I get to a key resistance level, negative divergences and that are troublesome. So with that, I would like to actually see us get above that key resistance that we're struggling with right now. Okay, and then so push up through it, pull back, show that it's now support, and then start to take back off again. Does that make sense? So proof of concept, show me that it's support, and then I can look for the long side trade. But until that happens, this is just one big nasty band of resistance. Okay. All right. All right, Chris, you're very welcome there. All right, is 1220 tick stop loss for crude only for the 2-minute chart? Well, yeah, because the 12 or 20 tick stop loss, as you can imagine, Justin, the 1220 tick stop loss is what the average small lot retail trader, I've done this survey many times over the years, and it always ends up being approximately 12 to 20 ticks. So magically, the market just often pulls back. Well, we saw earlier, I showed the example, 21 ticks in crude, and then magically it turns right around and goes back up. Okay. And okay, Ahmad, very good. Sounds good. And so let's see. Re-enter. How long is the trade viable? When has it gone too much and missed? Well, okay. So Harvey, part of that has to do with your target. So remember what we said. Like for you got it. What is the amount of money you're looking for minimum for a trade? Thanks, Robert. I appreciate that. And by the way, Patrick, I see there's broker related questions here. People asking how to get some of the tools. And so just to review those tools, this is the starter package of indicators. I'm sure Patrick will talk more about it. For those of you that were asking about it, you can get those for free for like 30 days. Patrick can show you how. That's the starter package of indicators, right here. Okay, these guys. All this stuff, drawing lots of squiggly lines. Then we have my professional package, which many of you have seen over the years. Then we have my champion setups program, which as many of you have seen over the last couple of years, my trading competitions and such, usually pull those out when I'm looking to try to win those, or like today when I use it to stay in a trade. And then the institutional indicators, which are not publicly available yet, but have a lot of really cool bells and whistles as well, including those scanners that you guys saw just a little bit ago. So a lot of great stuff. So this is those scanners, okay, which helps identify some of those trading opportunities. Okay. All right. So so right now you heard what my thoughts are on the situation with stock indices. We traded crude oil, and the yeah, so Justin, let's do that offline. I don't want this to turn into some big indicator pitch. I appreciate you guys' interest in my indicators and stuff, but this was meant to be to help you guys and answer trading-related questions and help try to be a mentor and help you in some small way. Through this process, highlight the CME products and talk about the Russell as well, which I'm excited about, and transitioning over to the CME. So that's really what this was meant to be. So yeah, just kind of keep it a little less focused on my products and more on CME strategies, the brokerage firm and stuff like that. Okay, we just went ahead and made the Inc. 5000 list for 2017, gang. I will say that I'm very proud of that. Our company has grown immensely thanks to you, and thanks to you guys wanting to see live trading. It's easy to backseat drive a trade. That's why most people don't trade. Most people won't come and trade live real money on a regular basis in front of you guys because they're afraid to, because, well, as Patrick appropriately said, it'll hurt their business. Me, I trade live. I trade live in these international competitions and everything else, putting out there, so everybody can go ahead and, learn from real live trading. Not everyone goes as perfect as I'd like, but that's okay. That's a learning opportunity as well. And I always talk through it, tell you what I did right, what I did wrong, and what I could do better. That's the real world of needing a mentor in the trading business. Okay. So Mahmoud, I have no problem with tick charts, especially with something like Infinity. With Infinity here, and I'll just give them a shameless plug, well deserved. They got a really light program. So like if I try to use that on some of the charting platforms that I work with in addition to Infinity, it is really hard to go ahead and do that. But with the Infinity platform, so I actually have a couple of charts that I have kind of in the background that Robert S. Well, thank you. Yeah, Robert says, at least you're truthful. Yeah, I'll tell you what I do right, what I do wrong, and what I could do better. That gives me the kind of that moral authority to try to help you guys. You know what I'm saying? And so I always tell it like it is. Sometimes that doesn't win me fans, but I got to tell you that I can't just say it's all sunshine and roses, gang, because it's not, right? But look, we just made the Inc. 5000 list here in 2017. We were just notified a week ago. Why? Because our company is growing immensely, because people are realizing, you know what, if I want to learn from somebody, I better learn from somebody who's putting out real live money trading. So, and as you heard from Patrick earlier, my broker is certified. I'm trading live. I just don't even really log into the simulator ever, except when I'm teaching you guys how to do like an order entry strategy regarding profit, stop loss distances, trailing stop management, stuff like that. I haven't even done that for quite some time. So and I definitely try to. It says, plus you take the time to explain things well. I definitely try to, Lee. Thank you. So, gang, what I'll do here is, I hope I answered your questions. I certainly tried. Let me just see if I got here. Yeah, Steve H. We didn't have one when I looked at the scanner there. So so there isn't one to fire off there right now. If I want to speak to you about your software, how would I do that? Michael, you could go ahead and call my office, 847-235-6131, or go to support@becomeabettertrader.com. I can type that in while Patrick's talking. And yeah, Priscilla, I'm sure Patrick could help you there. All right. So thank you very much, gang. I really appreciate that. I'm glad I was able to do a little bit of trading with you. Not one of my big money days or anything, but it's real trading and talking about why I stayed with the trade, what I was looking at, the risks associated with trading news-related market, and why I waited the 15 minutes. You saw the big whoosh down afterwards. And there was a lot of things about that needed to be reviewed, and you guys hopefully learned a lot from, and maybe can look in, you look yourself in the eyes and see, wow, you know what, that's one of those things that I don't necessarily do as well. Maybe that's an opportunity for an improvement, and can revisit your risk trading plan and talk about it with your registered financial representative like your broker. Okay. So with that being said, you're very welcome. So you guys, I'll put in my contact information there if you guys want to email me. And I'm sure Patrick will show you more about the starter pack that you guys were asking about and the broker related questions. So Patrick, I'll turn it over to you.
Awesome.
Sorry I wasn't able to make one of my big winning days for the gang today, but that was real trading, as you know.
Hey, man. Can't be sorry about that. I mean, this is live TV, so I appreciate it. Thanks, guys. Appreciate everything, and for everybody here still with us listening, I'm going to put a couple of links in the chat box here. The first one, if you want to get a trial version of the program going where you just want to do a little practice trading and see the live data and the dome, and you can trade on it and all that, that link is coming out right now. So you should see that in a second. And once you get that user ID and password, which you will need to access our software, there's a second link here, and your rep in our office could do this. You could do it yourself as well. Fill out this page where you punch in that user ID, and that's what's going to give a signal to Rob's team to flip a switch for you that lets you use that starter pack. So our demo comes with the live account, with a demo account with live data and charting and everything all wrapped into one, including Rob's setups. So I'm going to show the screen here real quick and just kind of give you an idea of what it would look like. So this is what you would kind of see as a brand new user. So you get the trading platform. There's going to be a bunch of live data over here on the left. These charts are, this quote board are linked to these charts over here. So when you click on a symbol, they flip over to the new symbol. We saw Rob looking at crude, S&P, Nasdaq. Here's the Russell here, and so on. So it's a really, really lightweight system, and using the simulator does not, does not obligate you to open up a live account or require you to divulge any real personal data. It's all just phone, email, name, and you click submit. All right. There's a couple questions that came through. Anybody interested in the chart setups and customizing the charts? And if you're a Thinkorswim or a TradeStation guy or gal, and you're unsure if you can rebuild your setups in our charts, you probably can, especially with a little bit of help from us. We are very competent on the charting program, and that's what we do, is we help people transition over who originally didn't think they wanted to. That's our job. So we have gotten very good at helping people transition from other charting programs when they feel like they're up against this huge, daunting learning curve. It doesn't have to be like that with the amount of support and the kind of support that we're capable of offering. All right, so please feel free to try the Praxis account. Chris, it's good for 30 days. It's got live data on a whole bunch of different products. And it's, yes, Tony, a couple other people, it is 30 days. The charting program, Michael, is free with 10 round turns every 30 days. So if you open up an account with us, our charting software is $20. Otherwise, we waive that fee with 10 round trips every 30 days. Rob's starter pack is really good for only 30 days. So if you want to continue with it, you would contact his team. He's going to show you how to do that. We do offer the NYSE tick and about 200 other market internals as well. Yep. For those of you asking about that. We do not offer the VIX futures, Fitzroy. No, we don't connect to the CBOE. We do offer the synthetic VIX as a study that can be added to any daily chart or any chart at all as a good measure of relative volatility. We just don't connect to that exchange for trading. All right. There really is no, Priscilla, you had asked earlier about this cumulative bid and offer volume thing. We don't really intend to, I don't believe we intend to make that a part of the dome. We're trying to keep the dome super, super light without a lot of useless gadgetry, so to speak, on it. The fact remains that, as you know, a lot of that bid and offer data that you see on a depth of market screen is not the person placing or the computer system or institution or whoever placing the order doesn't necessarily intend to allow that order to be filled. That's not the marketplace doesn't like that, but it does tend to be the reality. So we don't really rely on bid and offer depth really for anything, except for just a general idea of how liquid a market is. So for example, if you bring up a dome of, let's say, the S&P like this, you can see the bid-ask depth is it's significant. It's 500, 900, 1500, 1600, sometimes more, and so on. And when you bring up a depth of market for crude, you can see that it's a lot thinner. That doesn't mean it's a worse market to trade. It just means that there's just not as many participants. So usually people will look at the bid-ask depth as a general idea of how liquid a market is and whether or not it will suit their style, not for super short-term trading decisions. Okay, so that's just my my belief on that, and I think a lot of our clients and a lot of the other reps in our office share that opinion. David, you'd want to contact Rob's team for pricing on his stuff. We don't process the billing or make money on indicators or anything like that. He's got all kinds of different services to offer along with the live trading room. There's a lot of things that are bundled together. So I would encourage you to contact BBT, Become a Better Trader, at their website for that. Jay, there are exchange fees for CME products that range between $6 and $18 a month. So that's really the cap. If you look at the quote board that I had earlier here, I'll just put it up real quick. All these different markets here, we're talking indexes, currencies, metals, energies, interest rates, agricultural products. All these all together are only $18. So you're not looking at a stifling, monthly expense. No, Paul, we don't integrate with that at all. If you'd like to have the RTY contract added to your account, just email your rep in our office. Jose, obviously contact me, but just have your rep, let your rep know and we'll get it added for you right away. If you have the S&P or the Nasdaq on your account or the currencies, there wouldn't be a fee because they're included in the same bundle. So it's not like you're looking at another cost. We have tons of tutorials, Ian, on our YouTube page. Just reply to any of the email you get from Infinity. We will send you a series of well-organized playlists on YouTube that talk about how to activate, set up the charts. Even a lot of the cool things you can do with it are documented very well there. Han, the Russell is currently $5 a tick. Will it change? We don't know if it'll change. That's up to the exchange. But as of now, we haven't heard anything about that. I doubt they will change it just so soon after releasing the contract, though. We do offer the DAX. We do connect to Eurex, yes. But they charge money for their data, a little bit more money. We do not offer stocks, Paul, or P, sorry, just futures. We do offer the market internals like the tick, the TRIN, advanced decline ratios, vol spread, that type of thing, but we don't actually offer stock data. And the minimum, folks, yes, is $3,000. That's correct. You can code in the charting program if you want to, yes. Sierra is basically, they offer a language called ASCIL, which is a derivative of C++. If you want to compile and code and compile your own indicators and import them into Sierra in a DLL format, you certainly can do that. And if you're a developer by trade, you're probably going to love it. Tom, the cost of trading the RTY in the vast majority of cases for most folks is going to be the same as the other indexes. So just talk to your rep about that because the exchange fees are the same. Okay, Bo, so there's two costs that you want to be aware of in general. Okay, one of them is the charting program, which is free if you do 10 round turns every 30 days. Otherwise, it's $20. That's cost number one. So free with 10 round turns every 30 days or $20. And then the CME market data fee, which will be between $6 and $18, depending on which markets you're requiring access to. Robert, how many ticks per $5 point? Well, it's a $5 per tick. So there's 10 ticks to a point, so it's $50 for a full point move. Used to be 100. All right. Another thing I wanted to mention too, if you're interested in taking a look, we're getting ready to launch the next live trading challenge. This is a kind of a fun thing that everybody can participate in. It's free. If you want to participate, just go to livetradingchallenge.com. I'll post that in here as well. That's a fun way to get involved where we're keeping track of the results, and there are some rules, and you kind of got to stick to them to stay in the contest. So if you want to do a little practicing and just get a fun intro to this type of trading, you can do that too. I didn't want to forget to mention that. The CME is graciously offering significant commission credits as the prizes for people who come first, second, and third. Bo, no, Rob's champion setup is not part of the demo. That's something you'd have to contact his office about. Steve, it's €21 a month for that. Yeah, definitely. Well, it really is a very light program. Again, for those of you who are considering, looking at our program, if you're coming from another program where futures are not quite the focus, there's a couple of really big names out there where they offer futures, but they typically don't do as good of a job based on the feedback that we get from our clients in terms of handling the order execution, the speed and intensity of the data, the flexibility of the margin, it comes and goes at times. With Infinity, this is the only thing we do. So if you're going to do something risky, if you're going to do something that, that is not the same as, real basic stock investing, this is a more active trading, generally speaking. It's riskier. There's more leverage. Just like any other business or any other venture, you could probably make a good argument that it might be worth it to consider working with a firm who specializes instead of one who treats it as a side project. And Infinity has been in the futures business for over 20 years. A lot of the reps in our office have been with Infinity for 6, 7, 10 plus years. That is just not that common in our business anymore. And we think it's important to mention that because it demonstrates properly the air of stability of Infinity Futures. So we're very proud of that. Paul, the synthetic VIX study inside Sierra uses the same formula as the VIX, actual VIX. So you can apply it to any, any chart, and you can get a good measure of volatility, even on like a 5-minute crude oil chart, for example. It's going to give you a good measure of relative volatility. Yeah, thanks, Buck. Appreciate that. Jay, that's a good question for Jay and Weeb both. Those are questions for Rob, Rob's team. Actually, I'm sorry, Weeb, your question is for Rob. We don't do any of the billing or anything for the charting of for the indicators. So if you're looking to get something like that add-on he was showing, I'm not sure if that's available yet, but you'd want to talk to his office about that. Jay, the exchange fees for data, they come right out of the account. You don't pay them any other way. Someone asked to see the VIX study. So the study is just called the synthetic VIX. So you just add it to the chart. And let me make sure this is in the right region. Region 3, and this is what it looks like. So it's a relative measure of volatility. So just like the VIX, you can see that it goes down when the market goes up, and it goes up when the market goes down a lot. So that's what it looks like. And this is a study that can be applied to any chart. Scott, the commission rebates that we offer through the live trading challenge are basically donated by the exchange as kind of they're getting exposure out of this. They're getting people who are stock traders or option traders looking at futures for the first time. It's worth the investment for them. So that's how the commission rebates come through, and that's for the people who place in the live trading challenge, which is not really related to a live account here with Infinity. It's more like a fun contest we do on the side. Yeah, we will have it up on YouTube here within a day or so. Okay. Client, no, we do not offer the premium index that you're asking about. No, that's comes with something really only with stocks. We don't really offer that. Han, because this is not the VIX, it's a study called the synthetic VIX. That is a study you can place on, in this case, it's on a Nasdaq chart. So it's not the VIX that you see when you Google VIX. This is a study that uses the same formula as the VIX, and it's applied in this case to a daily chart of the NQ. All right. Michael, you don't change the symbol on the dome. You actually open up a new dome from the rectangular window that we call the scoreboard. That's this window. So if you want to launch a dome, you go up here, you add the symbol to your menu using this blue plus sign, and then you push the little blue arrow into the D column like that. So you push this little blue arrow into the D column to launch the dome. All right. We have lots and lots of good stuff on YouTube for basic tutorial type stuff. We'll make sure to get that to you. If you have a trial of the program and you're hitting a wall or you're feeling stuck, just send an email back to anyone or any email that you get from Infinity. That'll go right to the proper rep, and we'll make sure to get you all the tutorials and everything that you need. Okay? Seth, you're asking about our internet speed. I mean, I don't know. It's fast internet. You know, we have. Are you asking for yourself? I'm not sure what his internet speed is. Okay, Paul, the synthetic VIX is a study that you can apply to any chart that you have on the screen. So you could apply it to crude, you could apply it to euro, you could apply it to the S&P, et cetera. So it's just a study. It has not really nothing to do with options. It just uses the same formula as the VIX, and it applies it to whatever chart data you have displayed. All right, folks, I think that's where I'm going to leave it for now. I appreciate everybody coming. I'm going to read through some risk stuff one more time. Rob, thank you again so much for coming in the middle of the day like this and doing this presentation for us. For those of you who stuck around here to the very end, especially, thank you very, very much for your time. And we would certainly love the opportunity and appreciate the opportunity to work with you. So please try our program. Consider us if you're going to be trading live, sometime this year, or even just, forming a game plan. We'd be happy to be a part of it and try to help you steer clear a lot of the obstacles in our business that new traders encounter. We could be a great team member for you. We really appreciate your time. All right, folks. Thank you. Have a great day.